back and the pressure on the currency continues today. The currency traded in a narrow range and shut shop at around 60.88 on your screens there. There has been reports of dollar selling by exporters. The weekend dollar index as well did help ease some tension there. The mixed economic data from US weighed on the dollar, which in turn helped support rupee and most of those Asian currencies as well. Getting in also then Manoj Rane, he's MD and Head Fixed Income and Treasury Head in BNP Paribas, and he joins us live on the show. Manoj, hi, welcome so much. What's your sense now coming in for the currency? The kind of decline that we saw in the previous week, nearly 3.5%. How have you made the rupee moves today?
See, the currency continues to be a slave of flows, and let's remember that without doing anything, we have $300 million roughly every day of just current account negative flows. So that's bound to tell, and it's unlikely that it will get papered over by capital flows, primarily because of slightly shifting regulatory stance on what they really need to do. I think there's a lot of uncertainty. As you did see on Friday evening, as the currency started to move up, yields which had corrected sharply again shot up rapidly. So my sense is that we still remain slaves very much to what the regulator is going to do, and hence there is a lot of uncertainty in the market.
You know, for the longest time, or rather 2 weeks, the RBI was trying to defend 60 mark on the higher side. Now it perhaps is 61, but it just is touching that and teasing that level yet again. Would you say that whatever the steps that have been taken by the regulator have been short-term, markets really taking that in the view, and that's the reason they're completely ignoring that?
Actually, these moves being short-term, I don't think really bears up to anecdotal evidence, because you look at how yields have behaved. 1 year OIS, the overnight interest rate swap, is just about 25-35 basis points down from the highs, and at the high it was 160 basis points higher than what it had been on 14th of July when these moves were announced first. Look at the 10-year government bond. It's 70 basis points higher than when it was just prior to the measures. It was at 850. It's at it was at 750. It's at 820 now, and from the high of 830, it's just 10 basis points down. So, do you really? I don't think you can argue out that these are short-term measures, so they impact short-term rates. They indeed don't, and hence I continue to hold that markets are really nervous.
Manoj, what is the next step that you really do see coming in from the regulator perhaps, because they still are trying to work the rupee on the higher side? You still hear about perhaps further new steps coming in sense of sovereign bonds or not, or NRI deposits and many other things. What do you foresee as the next step?
Manish, as I told you, unless there is a conscious effort to get in large capital flows, and I think an NRI bond and not a sovereign bond is really the answer. Anything else is going to be counterproductive, as we've seen. So I would like to see the regulator announce something like that, but I'm afraid the regulator is likely to still chase the illusory liquidity tightening measure, which I think the entire market is afraid of. Unfortunately, I think that possibly could happen in case you see the currency cross 61 decisively again.
Manoj, all the major central banks, whether it was Europe or US, have left the policy unchanged in the previous week, as we saw, including India as well, if that counts. What does that tell you? That growth perhaps is not yet on track, and we do need that extra stimulus coming in. And how would you see that impacting the currencies in sense of dollar index, euro, and impact thereof on Indian rupee as well?
See, the growth dynamics are completely different in the rest of the world compared to what they are in India. India, we are still saying 5% is bad, and globally people, everyone is trying to address negative growth. In the US as well, data has been mixed. It just goes to prove that maybe Ben Bernanke's tapering comments were a little premature, and I think that has been corrected over the last couple of weeks. That in fact shows up in how US data has been, and as a result how markets have reacted. So I think regulators globally are pretty much doing the right thing in terms of not tightening or moving to raise rates. But in India, I think the dynamics are different. But I do think that growth remains extremely important, because ultimately in the long term, it is investors come into India because of growth. They don't come into India because of interest rate differentials. So I think it's very important to get back to the encouragement of growth as a dynamic in India.
Manoj, looking at all of that you just spoke about, what's your sense coming in for the currency now? What's your worst and best trade coming for that one for the coming next week, 1 month perhaps?
You know, volatility is a given, so you will continue to see volatility. It will depend also on some talk emerging out of regulators as well as the Ministry of Finance, which has been a bit quiet in the last 3-4 days after a lot of chatter over the policy day and the next day. So I think volatility is a given. I would be personally extremely surprised if the currency slips below 60, and I would think that 61, whether we like it or not, is going to get tested very soon.
Vijay, what's your sense coming in for the currency now? Today, of course, has been a choppy, but the closing has been quite flat. How would you want to trade tomorrow or for the rest of this week now?
Manisha, today's relative stability can be assigned to the nerves getting calmed in the equity markets. So you've seen the rupee where it is today. Should everything else remain constant, I think 61.50 to 61.70 in the currency derivative segment in the prompt month futures is still on. And in case the rupee was to appreciate, I think 60.40 to 60.50 is a level where I would not really mind getting my toes wet in buying the dollar.